It's Monday, the 24th of March. You're watching Dukascopy TV. I'm Natalie MacDonald here with the Week Ahead interview. On the line to talk us through the events and data shaping currency markets this week is Colin Ciezsynski of CMC Markets. Colin, G7 nations met today at The Hague for a nuclear summit hijacked by Ukraine crisis talks. While the G8 has been suspended pending a change in the political scenario, both Italy and Germany have shown an unease at severing the G8 link with the Kremlin. Which of the G7 nations could have the most to lose economically speaking should Russia be expelled?
I think that the European continental members of the G7 would have the biggest potential impact from an expulsion of Russia. That would be Germany, Italy, and France. Certainly, they have significant ties through energy as well as commercial ties, and it's important to consider: are they prepared to take that sort of a step of a full expulsion, or more of a symbolic step such as a suspension? What's really been interesting in the markets today is that we're seeing that ahead of these talks, the gold price has continued to fall while the ruble has actually been rebounding, which would suggest that the markets are in some ways thinking that perhaps tensions may actually ease going forward as gold, being a traditional haven, tends to rise during times of increasing tensions and fears.
Tomorrow sees the release of UK inflation data. In the wake of last week's budget, where will the Bank of England want to see this figure sitting to avoid a sharp rise in interest rates?
Historically, the UK has looked for an inflation rate of around 2%, and they're not the only country. Canada and a number of other countries also have, even the United States, have inflation targets in and around the 2% area. For the UK tomorrow, the street is expecting to see an inflation rate of about 1.7% and retail prices of about 2.6%. So certainly, as long as inflation remains relatively contained, there wouldn't be a huge amount of pressure on the Bank of England to necessarily need to start taking rates higher. And in fact, a lower inflation rate, as long as it's above about, say, 1%, a little lower inflation rate might actually be welcomed by the street as taking pressure off of the central bank to raise rates in the near term.
The US calendar, meanwhile, sees flash services PMI data on Wednesday, final GDP figures on Thursday. How much will markets still be bouncing around following the mixed response to Janet Yellen's first speech as Fed chair last week?
A fair amount. We're still seeing consolidation in the United States as the street digests what happened at last week's Fed meeting. And on top of her speech, we've also, because the blackout has come off, we've also seen a number of speeches from other Fed members, both on Friday and continuing into this week, where they're indicating that this is all part of the longer term normalization process. That, as I noted, you have kind of a long term goal of interest rates around 2% and inflation around 2% would be normalized monetary policy, and right now at 0.25%, the U.S. is certainly still heavily on the easing side, even while they're pulling back on quantitative easing. So even if they did start to normalize rates, we're still looking more at taking their foot off the gas rather than putting their foot on the brake.
LATAM currencies will be under the spotlight later this week as leader of the Fragile Five, Brazil, is set for unemployment data on Thursday, with the release of government budget value bringing up the rear on Friday. Argentina's GDP figure is also due for release on Thursday. Do you see opportunity in LATAM currencies at present?
We have continued to see a little bit of strengthening over the last 6 weeks in Brazil's currency, which is quite impressive considering that we had seen a general correction in emerging market currencies. They had weakened dramatically. They had started to strengthen over the last few weeks, but more recently we've seen a number of other currencies such as the Turkish lira and the South African rand have actually started to weaken again over the last couple of weeks, whereas Brazil has remained relatively strong. It does seem as though it's starting to go its own way, separate relative to its group, and at this point in time does remain in a strengthening trend, which is USD BRL declining.
Colin, that's all we've got time for right now, but many thanks for your comments. I'll be back tomorrow with a look at the ongoing G7 talks. For now, though, it's goodbye from me.